Dinshaw Irani joins us now. Let's take our conversation forward. Dinshaw, good morning. Thank you for joining us. It's been a good, solid, and a rewarding December. All you have to do is watch ET now, keep the faith, and follow Dinshaw Irani. What is in store now?
Okay, so Nikunj, we are. I mean, the scenario is going to change, right? I mean, you're talking about a high inflation, high interest rate scenario, which is going to be the ruling the roost, if you will, probably for the next year, at least for the first half of the next year. I don't think many fund managers today have seen that scenario, or rather treated that scenario. So I think that's going to be an area of concern. Obviously, there'll be picks. There'll be picks along the way. There'll be ideas will come along the way. So you'll be very selective out here. And since it's the season of football, probably, you have to line up your defenses, and as you may see, just the offense building up a bit. So that's where we are. I think we're being cautious here. We're not calling it we're not saying that we're going to sell out anything or anything of that sort, but we'll be more of on the cautious side rather be a bit more cautious than be aggressive at this point in time and end up losing money. Better to err on the side of caution, I suppose.
Dinshaw, so what's your cautious side telling you about what to do with the fintech majors? Buyback announcement from a Paytm. It seems like they're at least focusing on the path to profitability.
Right. So, Aisha, good you asked that question, because that's one of the stocks which has been just added to our portfolio. I mean, added as in we're talking about a couple of weeks back. So basically the call here was that what do you look in a platform? I mean, by the way, we like finance, right? I mean, that's a thing that we've said very often. And obviously, fintech was one area that we are looking at very closely. So what do you look for in a platform? Obviously, Paytm is a platform which provides convenience, ticks the box, right? Which can lead to a lot of users coming in, ticks the box again. Can you monetize these users? Definitely you can. As in when the convenience becomes a habit, you can, right? Ticks the box again. Is it easily replicable? Well, that's a no, right? So that's four things that you look for in a platform, and that's what has helped us get convinced on the stock. However, we were waiting because we were not convinced in the price, obviously. And as and when the price came off, in fact, it came off quite a bit. And that's when he said, okay, now is the time to look at the stock. And we got in at the stock. I mean, in the stock. So we like the story. We like the fact that the management is talking the language of the market instead of a TAM and stuff like that. They're now talking about growing their profits and breaking even and stuff like that, which is a good thing.
Okay. So I'm assuming that you added Paytm. Okay. Now my follow-up question on Paytm here would be, the payment business, they don't make money. 7 to 6 paisa is the spread. That's a business where competition is intensifying and will only intensify. That's your bread and butter business. Your MDRs are 4.5% in the lending business. A credit card company makes 2%, they are making 4%. Don't you think there would be a change in regulation?
So Nikunj, I knew you were going to ask me that question. So because the moment
you can read my mind.
I know you knew you would come in. So. No, also look at the base, right? I mean, look at the base of users. You're talking about huge amount of users contributing these pesos that you're talking about. And anyway, we're now talking about them becoming a merchant rather than actually, I mean, so they have this base of merchants, right? They can always lend out to these guys. They can get money from, I mean, they're just sourcing base for these fellows. They're probably going to be commission agents, if you will, in between. So I think the regulation will be more related to that than rather anything else. So I think we're in a good space today in Paytm. Given the price also, I think we're in a good space. So let's hope that things work out and let's go from here.
You know, we usually talk niche consumption with you, Dinshaw. I like where this conversation is headed. But Paytm aside, tell me, what about the other, frenzied spaces? I don't know frenzied or not, but the other spaces in the market right now, PSBs, railway stocks, defense names. Have you been invested in any of these pockets?
So, the biggest PSB in the space is SBI, which is probably equal to the whole industry put together. And I think we've got that in our portfolio. We're probably the number one holding in our portfolio today. So we are there. We are very much there in the and this is despite saying that we love private sector banks. The good thing about State Bank was and still is the sum of parts story, which is playing out. I think that's working perfectly for him. And despite this huge run up, the price to book also is still not that expensive that you can say that, okay, it's too expensive for a public sector bank. So that's one part. On the defense side, we have got only one stock, which we think it's going to be more of a, I think going forward. Today, it's more of a story dependent on domestic orders coming in. But I think going forward, it will be one of the stories where there'll be the manufacturing outsourcing happening from here on. So that could be a big one playing out here. In terms of railways and all, no, none of those stocks we have touched, because you've seen how policy changes have impacted these stocks. So we rather would stay away from those stories as such.
So, Dinshaw, you divulged Paytm. What else is it that you've recently added to the portfolio that we don't know about? And can you share the defense stock name?
So I will not be talking about any stocks. It was just that you guys mentioned it, and that's why I had to reveal it. Otherwise, we've just come out with 2 new funds, and would rather build up our positions there rather than talk about and pull up the names in our portfolio. You can guess the name in the defense bit, Avan. I mean, it's one of the biggest defense companies around. Basically, it's Bharat Electronics. So, okay.
You succumbed, and we're quite happy. But Dinshaw, what about the cement space? Because that also is garnering a lot of attention right now. Would you believe there's opportunity?
So cement is something that we looked at, and frankly, I mean, wherever the utilization levels are still very low, right? You've seen that, and the only thing is that industry has learned is the price discipline. I mean, that's what they call it, though. But our feel is that it's okay. You can play with this, but frankly, I mean, we would rather go with other players than cement per se. There are lots of, as we say, there are lots of ideas in the market. We may lose out a few here and there, but the fact is that if one aggressive player decides to go rogue in the industry, the whole industry will suffer, right? So that's why it's rather avoidable than anything else here. So we would not be too excited with what's happening in that industry today.
Okay, so that is one space which is not exciting at the moment. Good morning, Dinshaw. Can I ask you one question, which is that, you guys had started selling off IT stocks from your portfolio. Then I remember Sameer Arora also saying that they've not bought any IT stock and are actively exiting it. Is that still the situation? Do you own IT stocks? Are you looking to change that trend?
So, Nayantara, in fact, selling off was till June, July of this year. We've zero in IT today. So I don't think there's anything to sell for us, except in a long short fund where we will be shorting the names out there. But our feel is that industry is going to go through a fair bit of choppiness. I mean, we've been calling it out from the June end results. We've been calling it out that things don't look that great. Though you can already feel that when you talk to the management, the caution is building in. They're talking about deferment of projects and stuff like that. They're talking about utilizations moving up. They're talking about their outsourcing becoming more of a insourcing bit and stuff like that. So it's obvious that things are not looking that great. I think today they're calling out what they're seeing, immediately seeing today, right? The order books are fairly good, so that's why they're calling that out. But the fact is that by December end, when the December numbers come out, you'll hear a fair bit of cautious commentary coming from most of the management as such. And then will be the March quarter numbers, when you'll see the likes of Infosys giving out their guidances. I don't think they're going to be that exciting anyway. So our belief is that it's still at a 40% premium to pre-COVID levels, the valuations today. Better stay away. You may see valuations correcting rather than any big correction on the earnings front and stuff like that. Earnings will still be around the mid single digits kind of earnings growth is what is expected for FY24. I think they've more or less achieved that, but valuations will not sustain. That's our call here.
Okay, so that's Helios Capital, which doesn't own a single IT stock. The shredding began in the middle of this year. So can I ask you now, Dinshaw, you've been candid enough to say that you own SBI from the PSU banks. Now, there are a lot of people who must be looking at what's happening with the smaller banks and trying to figure out what's going on from a Canara to a Union Bank to a Bank of India to an IOB, just the run-up that we started to see. Now, even from the private side, look at what's happening with the Yes Bank. Where are you when it comes to this? Are you going to join the small bank party?
No, no. In fact, let me tell you, we started selling off IT in the beginning of this year. Okay, I mean, from Jan onwards, we've been shedding weight, and probably we were zero by July. So that's what I wanted to correct. In terms of the PSU banks, I don't think we've looked anywhere beyond State Bank of India. Though our analysts did bring across a Bank of Baroda, and we said, no way. I mean, this is the max we can go here. So I don't think any other smaller bank will be looking at in the PSU space. Frankly, I mean, you heard so many things about the PSUs and things happening. I remember BPCL privatization, which was announced at one point in time, and nothing went through, right? And today there's no privatization. So there's lots of slips between the cup and the lip in the case of PSU. So we would rather avoid PSBs rather the small cap and mid cap ones. So we'd rather avoid those.
Okay. Dinshaw, let's look at what is in store for 2023. Somewhere the recession talk is back. When inflation talk is there, initial talk is always good news. That's pricing coming back. That's pricing power coming back. It's only in the last couple of months when inflation got out of the hand, it became uncomfortable.
Right.
But next year, the theme would be slowdown, recession, markdown. In that kind of an environment where recession and a slowdown is a bigger concern than inflation, what would be the market template?
So, okay, Nikunj, in fact, that's what we've been saying to our investors also, that don't get too carried away with the short-term moves in the market today, because we've seen this earlier. We've seen this panning out in some way or the other in our lifetimes, such, and the markets are going to be choppy, right? I mean, fortunately for India, we have some intrinsic strengths going around. I mean, one is obviously the manufacturing outsourcing story playing out. The second one is the domestic consumption story, which is playing out. Frankly, I mean, India has managed inflation very well. In fact, we didn't need any interest rate hikes from now on also, but we have to match the Fed, and I think there'll be some more coming in here. So that way, India's fairly insulated, but that is about it, right? I mean, beyond certain point in time, you have to look at comparative valuations. And frankly, I mean, India today is already at historic highs in valuation comparisons to various other markets, be it emerging, in fact, even if developed markets were taken into consideration. So that way. So India's done fairly well. So I think from here on for India to outperform, the globe has to stabilize, which doesn't look the case, right? So you have to be very sanguine of the fact that maybe you're looking at a very choppy market going forward. And as a result, you have to be very cautious here. Don't sit on the sidelines, be around, but start staggering your investments. Do not go in a lump sum manner. And that's what we've been telling most of our clients. In fact, the new fund that we've launched, we've made it very clear that we're going to call money only when we see the markets stabilizing. In fact, we're doing it in 4 tranches. So in fact, even if we go wrong, we can always call for the money later also. So that is how we're playing this.
Okay, Dinshaw, really appreciate your time. And if we don't get a chance to meet you in 2022, good luck for 2023.
Always a pleasure, Nikunj. By the way, I checked on the courier which I had sent you for the chart. It's called snail couriers.
It's still not reached me. It's still not reached me. It is indeed a snail courier. But Christmas plan, Dinshaw, done? Are you planning to do the Santa number this year again?
Why not? Let's see how that goes.
All right. Really appreciate your time.
Thank you.
Have a wonderful day ahead.